Tony Manini here, the Executive Chairman of Asiamet Resources. For those who are unaware of Asiamet, we're a junior company who's developing a copper portfolio in Indonesia. We have one project, which is a 25,000 tonne SXEW copper project, which has had a full feasibility completed, and we're moving that forward now towards production. And we have a large growth project, which is Butong, also in Indonesia, where we have over 500 million tonnes of copper and gold in resource.
Tony, good to see you. I haven't seen you since April. How have you been?
Yeah, good, thanks, Matt. Very busy, but good.
Good lad. So look, you're obviously in Australia, I think Melbourne from memory, or Melbourne-ish from memory. Things in Indonesia, not so easy. Looks like a bit of an outbreak of COVID there. How are things on the ground?
Oh, look, it's been a particularly difficult time for people in Indonesia. Obviously, it's a developing country. It doesn't have the medical support facilities that we have in the UK or in Australia. So people have, it's been a very challenging time, large population, the virus spreading very quickly. So it's certainly impacted a lot of people. It's impacted us as a business, fairly significantly as well. Unfortunately, many of our staff have actually contracted COVID, have been ill. In fact, one of our senior staff, Mansur Geiger, is actually just recovering at the moment. He's been ill for a few weeks. And very unfortunately, we had one of our staff actually pass away from COVID-related illness about 3 weeks ago. So, we have been very impacted by it, and, our staff and families have been severely impacted by it.
Well, I'm so sorry to hear about that. And, it's a difficult one. You've got to put your staff first and foremost in here. Everything else is second place to that. So in terms of the on-the-ground ability to function properly, how much has it impacted your ability to deliver some of these milestones that you talked about in one of your press releases?
As I say, it's been pretty challenging. There's, despite what I just said, there has been some pretty severe restrictions around personnel and movement as well. So we've got a very dedicated team. We've got all our systems, processes, and protocols in place to manage outbreaks of COVID. We have a paramedic permanently positioned at site. We have a testing regime in and out. So, we've got our systems and processes, but all those sort of restrictions and obviously the implications of people falling ill, have slowed our progress to some degree, But, we've managed to do most of the things that we said we were going to do, but things are slower. So you can imagine services, laboratories, service providers, they've only got half staff or part staff working. So there's a lot of flow-on effects, not just directly with our own business, but in terms of the services that people provide to our business.
Okay, so since we talk, I saw a press release that you've been doing a little bit of drilling, but, first 3 holes completed, 440 meters. Doesn't sound like a lot. So it sounds like the impact has been quite severe in terms of the on-the-ground functional component to your operations.
Yeah, look, we very much so. We've, as I said, we've still managed to get things done, but it's considerably slower than you would like it to be. And by necessity, as you said earlier on, our number one priority is looking after, all our stakeholders. So, that's what we've done. We've got an obligation to do that. And it's the government has got its own regimes in place, which we need to abide by and follow. So, look, it slowed us down a bit, but as I said, we've still made very, very good progress, Matt, in all the key areas that we talked about last time I was on.
Okay, well, let's talk about a few of the things that we talked about last time we were on, because there's a bit of an overhang issue with regards to Eternum energy. I think you found a solution for that. So why don't you tell us about that?
Yeah, okay. So we discussed last time that we had this a 15.4% shareholder, which was Eternum Energy. We had a deal with them which went sour at the sort of start of this year. They subsequently were sitting there pretty much, as an overhang. And I think we discussed last time that, what we were looking to do there was to sort of find a solution for that particular block. Eternum had indicated to us that they were potential sellers of that stake. And hence, there was, they subsequently made a, concrete decision to sell. They engaged a consultant to find a buyer for them. I knew that consultant reasonably well. That consultant did speak to me and, asked me, did I have anybody that, may be interested in acquiring that block? Obviously, we had discussions going on with various parties around as a strategic investor into the company for the development of the project. In discussions with one of those parties, they expressed an interest in that Eternum Energy block. So subsequently, that particular individual, which is Ashish Gupta, put in a bid for that Eternum stake and was successful in acquiring that stake. Now, Ashish is somebody that I've known for a long time. We've done business in the past. In fact, we together, myself, with our private equity group, and Ashish owned and operated the largest gold mine in Indonesia, which we sold in 2018. So we've known each other quite a long time. Ashish subsequently bought that stake. He, following that acquisition, we've had follow-on discussions about, how he might have greater involvement in what we're doing going forward.
So, okay, you know him, great. So why don't you tell us a little bit about him? You've told us about something that you've done there, but where's his money from? Sorry, was it just from the projects that you used to work on? Or?
So Ashish has been previously he was with Farallon Asia, which is a large San Francisco-based hedge fund that he operated together with his partners out of Singapore. They've been in that part of the world for a long time. They have a lot of investments in broader Asia, but in particular, they've done a lot of business in Indonesia across a whole spectrum of different sectors, but also, particularly in the mining space, and not just in Indonesia, but in Australia as well and other places. So they've been a big investor in the resources space over a long period of time. As I said, I've known them gone probably over 20 years or so as investors in the sector. They've, privately backed some big names who've been very successful in, coal mining and metals mining in the past. And as I said, we had a partnership with them where we acquired what was a large gold mine in Indonesia, and we turned it into the largest gold mine in Indonesia over a 3 or 4 year period. We partnered with those guys on that deal, together with some other large Indonesian families, put together a consortium, acquired the asset, and expanded the asset, and subsequently on-sold it a few years later. So, look, as I said, we know each other well. We've done a fair bit of business together over the years. These guys, they've got a big pool of capital. They've been, as I said, very successful investors, well known across the space. Across a whole range of sectors, and they are very actively expanding their investment activities right now. Under their business is now, they've formed a new business called Tigavest, which has a whole range of different investments, as I said.
But how's that work, Tony? Because obviously he's got links with Delta Dunia and Buma, yes, etc., which are companies. So has he invested as an individual or through the company? And if it is through the company, what is their intent?
Yeah. So very good question. So Ashish has acquired the stake himself. Tigavest is a large shareholder in Delta Dunia, so they acquired that interest fairly recently, and Delta Dunia, or Buma as they're known in Indonesia, it's probably the second largest mining contractor in the country. So those guys have got a lot of experience across a whole range of different aspects of the mining business. So everything from EPCM contracting, building power plants, mine development, infrastructure development, roads. Engage. They're a big group with a lot of sites, and they're very big in Kalimantan, where our project is, which is critically important. So
does that give us a sense of we know what's coming down the line here? The contract. There's only one real bidder and one real winner. Is that right?
No, so let's just take a step back now. So we started out by just talking about who the investor was, but we're actually, and as I alluded to last time, we've actually signed confidentiality agreements with 5 different parties who are doing ongoing due diligence at the moment. Two of those are progressing probably more rapidly and more seriously than the other 3. Both of those are very much blue chip groups. As we've said in our public release, Buma has signed a CA post that acquisition of that share block and is now commencing due diligence work. We also have another blue chip Indonesian investor, another group who I've known a long time, very big in the resources sector in the country and offshore as well, for that matter. They are also, they've got a lot of people in the data room and working very extensively on comprehensive diligence. So we do still have a number of parties at the table, and we are progressing, that process of diligence. And, we have been discussing, some commercial terms for a partnership on the project. So it's more the thrust is really towards an operating partnership at the project level to develop the project, take it through, and then to operate to an operating status.
Okay, but you get my point. I'm trying to work out whether Ashish Gupta coming in with all his connections. It's a big company, right? Like 11,000 employees, a big company. There's not an expectation on their part, or it wasn't conditional on getting the work from you when you sort of, in terms of EPC contracts, etc. That's not part of what the investment included.
Oh no, absolutely not. I mean, the acquisition of the shares, as I said, there was a process that was put in place by Eternum Energy to actually sell their share block, and so that process was a separate process to what we're talking about now in terms of strategic investment. So that investment was made. Ashish has made that investment purely, on his own behalf to acquire that stake. He's a large shareholder in Buma as well. We've signed a confidentiality with Buma post that acquisition, and then they're underway with their diligence at the moment. So they're really 2 separate things, and one was not tied to the other in terms of the initial acquisition of that share block.
Okay. So when do you make a decision? When's the decision making time in terms of who wins contracts?
I think it's the first port of call is really who do we go with as a strategic partner. So that's number one, and that'll come down to and I've been very clear on this. It's all about value. So what represents the best value for shareholders in any transaction. So as I said, we've got 2 blue chip groups. They're currently doing diligence work. They're discussing commercial terms. And ultimately, and I've been very clear on this with the parties, is that it'll come down to the commercial terms and what's in the best interest of shareholders. and not necessarily sort of in the short term, but, longer term, what represents the best value proposition for the Asiamet shareholders. So, look, that's all progressing pretty well.
Tell me about it. You're having conversations with strategic partners, and just really clear what that means is someone to come in with a big chunk of equity for you to be able to, pay for the works which you've outlined in the feasibility study. So remind people how much money we're talking about and the types of strategic partners you're talking about. Are they local? Are they international?
Yep. So look, pretty clear. So I guess investors will know from the feasibility study completed in 2019. Look, it's being, we've got some updates, but let's call it circa $250 million for a 25,000 tonne SXEW copper project. The indications are that we should be able to finance that around 60% debt. So that's call that circa, 140 million. So you've got to solve for essentially $110 million of equity. I also have been very clear that, we don't want to come back to the market and be solving for a large piece of equity off what I consider to be a very undervalued, position that we're in
55 million market cap today. Yeah, that would be a tough one.
So. Yes, correct. So we've got to solve for circa $100 million of equity, and that's what I'm talking to. The potential partners. So the way that we're looking at that is somebody comes in, investor comes into the project, they solve for a majority of that equity and earn circa, half of the project is the way that we're sort of talking. So, that's sort of how we view it. Some of the parties are interested in more, some are interested in, around that 50% partnership. But at the end of the day, it comes down to value. So, what represents the best value. And, we feel that, the initial discussions that we've had, we should be able to solve for a large part of that equity gap.
So let's talk about how you do that. I'm fascinated about how you build something like that, because clearly at 55 million market cap, depending on the time of day here, that's a conversation you don't particularly want to have today. But would you getting the debt in place subject to mean that you can have slightly better conversations with these potential strategic equity providers? Or, given what copper's doing in the market, you should be on a tear right now, but you're not. Or are you going to be relying on other outside factors? And do you have the capital to sit around and wait for those other outside factors to come to bear, come to play, come to help you?
Yeah, look, so I guess the strategy here is pretty clear. So, yes, and I said this, I think, last time we met, the number of inbound, the amount of inbound interest and the amount of sort of serious parties that we've got at the table in the last 12 months, particularly the last 9 months, has been, probably more than we've had in the last 5 years. There's a very definitive, with the whole energy transition push, there's a lot of new players into the market looking for copper exposure. So whether they're, what we're seeing, Matt, is particularly in Indonesia, a huge amount of wealth has been built around the resources, particularly in the coal sector. So what we're seeing is that a lot of those, coal participants, doesn't matter whether they're mining contractors like Boomer or whether they're big coal companies, who have got $1 billion of cash sitting on their balance sheet. They are thinking, well, okay, how do we transition our business gradually over time and get exposure to to this energy transition thematic? So copper is very much in their wheelhouse, given Indonesia is a pretty, significant copper producer. There's a number of copper companies producing now. So those players are now looking at, okay, where can we get copper exposure? But of course, with the restrictions around COVID and travel and everything else, it's very hard for anybody to go geographically to go offshore. So those companies are sort of very much looking internally and saying, okay, what opportunities are there in Indonesia? Now, we've positioned ourselves, this has been a 5-year strategy to position ourselves to be basically a shovel-ready project into a strong copper market, which is where we are now. So it's no surprise that we've got interest in what we're doing. The key thing really is number one, is to ensure that we get a credible partner who can bring far more than just money to the table. Indonesia is it's an operating environment where, local operating experience is very important. So, all the groups we're talking to, they bring strong balance sheets, very strong balance sheets to the table, but they bring very significant amount of in-country operating experience, in-country permitting experience, and a lot of networks and relationships, at all levels of government and stakeholder engagement in country. So, and when I say blue chip, I mean people who actually, they run their business very much the same way as a Western corporate would. They've got very strong environmental, social, overlays to their business. Their governance is very strong. So, and they see themselves as, as companies operating in a global sector. So
you're talking about someone very specific there in your mind. You're not saying the name, but you sound like you're talking about one company very specifically.
Look, both the parties that I talked about that we're serious with would fit into that category. So
does Boomer fit into that category?
Pardon?
Does Boomer fit into that category?
No, Boomer's a very, very reputable. It's a very reputable, large, reputable listed. It's an Indonesian listed company with very high standards across the whole ESG spectrum. So they're as a mining contractor, they're employed by some of the biggest companies to actually do all their contract mining, in some cases, operating their sites. As I said, they build power plants, they do roads and infrastructure and etc. So, the overlay there is that you've got to be very good at community engagement, managing the social issues, and managing environmental aspects, because those two things tie together very closely to be successful as a business. And, that's part of their corporate brand.
Is that who you were referring to earlier? I know you've got two, but were you talking about Boomer specifically?
Yeah, so you asked me now about Boomer. So does Boomer fit that category? And I said yes. And the other. And
then I asked were you specifically thinking of Boomer when you were talking about it? Is that who we're talking about?
I was thinking of both parties, as I said.
Okay.
Both parties would fit that bill in almost the same way.
Fantastic. That's good. Let's say if it was Boomer. Obviously, with Ashish Gupta's, whatever it is, 15.36% shareholding now. If you did appoint Boomer and they did take an equity position of whatever, potentially 50% of the project, that's effectively like you handing over the business to Boomer, isn't it?
No. No. One's a 15% shareholder and one's 50% at the project level, right? So the project level, and that's one of our projects. We have two. So it's part of our business. We've got a good supportive shareholder long term who, he wants to obviously make money out of his investment irrespective of who we end up going with as a partner. So, I guess, if Boomer are the partner, then, it's a project level deal with Boomer, and it's not a corporate deal at the Asiamet level. So, I feel that those two things are, they're separate things, and they don't sort of provide control to any particular party.
Okay. So can we talk about the timing of these conversations, when it'll happen? Because again, I refer back to one of your statements in a press release where you talk about obviously the the focus on health and well-being of employees and contractors as a first priority, as you should. But finance and development related activities are continuing at pace and closing in on a number of important enabling milestones. So you need money to deliver milestones. So when's the money coming?
Yeah. So, firstly, let's just talk about, we raised $15 million at the start of the year, and we said we were going to do a number of things with that money to get the project ready. The three core work streams really were, number one was, as we talked about earlier, the technical side, the process flow sheet, which we've actually done a considerable amount of work that now. We've narrowed that down to two options, and we're just finalising which option we're going to take forward, whether it's to stick with a heap leach project with a few changes to that, or whether we go down producing a concentrate route. That was the first thing, and we've done a lot of work on that, and that's coming to a conclusion pretty soon. The second piece was really on drilling, and to get back on the ground, get the rigs turning. And look, that's there's a couple of reasons for that, and they are, number one, when you're going into project financing, the longer the resource life, the longer the reserve life, and the demonstrated sort of potential for resource extensions and mine life extensions is important, because debt financiers, their main driver is, am I going to get my money back? When am I going to get my money back, and how much is that going to cost the company? But getting their money back is a key driver. So demonstrating longer life, demonstrating a more robust project is very important to help with project financing discussions. So that's the second thing. The other piece, of course, is that we're in discussions with strategic investors coming into the project now. So, it's in the interest of all shareholders for us to clearly show that there's a lot of upside still to come in this project, and, grow the resources, demonstrate that there's a longer life, and try to capture some of that value today in terms of, the discussions and commercial discussions around the deal. So it's an important part of leveraging our position in discussions to actually demonstrate that we've got a lot more life in the project.
So what's more important for the business and therefore shareholders to you as far as you're concerned? Because getting one of your projects into production and getting some cash flowing, even if you end up with only 50% of that project, or expanding the resource in the hope that people give you credit for it, and again, maybe it drives share price up. How do you get that balance?
Our number one priority is to get into production as fast as you possibly can. I mean, cash flow, you want to get into cash flow as fast as you possibly can. So, I've made it very clear to our team that, we've set ourselves up for this. We need to get into production for the smallest amount of capital possible in the fastest time frame, and that's what we're working towards. So that's really the core driver, the core focus. As I said, there's a small program, it's 3,000 metres of drilling, and that has important implications for project financing and important implications for strategic investor discussions. So, that's certainly secondary to getting the project into production as quickly as we possibly can, but an important consideration at the same time.
But what's the arbitrage there when you're making decisions, or you're talking about this at board level? You go 3,000 metres. I mean, what's that really going to add in terms of resource size? How much more value or leverage can you gain in your negotiations off the back of 3,000 metres? Because it's just going to be, let's say, it's more of the same, isn't it?
Oh, look, it's I've been in this position many times in the past, and clearly demonstrating that there's a longer mine life and there's significant upside potential is a very important piece when you're in this phase of discussions with financiers. They will always want to see, okay, well, let's assume this is the way that a financier works. He says, let's assume things don't quite go according to plan. Am I going to get my money back? How long have I got to get my money back? So if I can clearly demonstrate to those guys that there's a word for it. It's called reserve tail, How long is the reserve tail? So if we can demonstrate we've got a much longer reserve tail, then it obviously gives greater confidence to financiers, who you're looking to provide debt for the project. So it's very important, as I said. I've been in this position many times, and I think one of the things you got to, I often hear that sort of it brought up about, well, what's a drill program going to do for you now? But if you look at, I use Sandfire Resources in Australia, right? ASX listed Sandfire. Sandfire actually had a very aggressive drill program right through the time that they were actually developing the project and in discussions with project financiers, debt and equity to develop their project. And they were able to actually maintain a very full price, full value, and get some, very good terms, for their financing, and actually, keep their equity valuation, really, really strong. So there is a big role to play, in my view, to clearly demonstrate that sort of upside and opportunity for longer life. So drilling, I think drilling's pretty important even at this stage.
Okay, so you put out 3 holes so far. I mean, do you want to give us the drilling update then, given its importance to you?
Oh, look, we don't have any assays yet. We put out a release today, Matt, which clearly shows the targets. And what we're trying to do here is to demonstrate not just little incremental things. We're trying to clearly demonstrate that there's much bigger potential. I think I said last time, we've been 5 years, we've been very capital constrained. Almost every dollar we had has gone into the feasibility study. So we haven't had a lot of opportunity to demonstrate the upside potential. We got about 2 million tonnes of high-grade resource at the BKZ project with 3 months of drilling, in 2019. So, we're looking at testing some bigger potential targets and also expanding, the existing resources to demonstrate further life. So look, it's a twofold. It's a small program, but I think it's a high impact program. So it's going well. As I said, we're on the 3rd hole. We've seen some good stuff in the first holes we've drilled. We've got some good things to drill. So I'm looking forward to progressing that and getting some good results.
Okay, but you've also, because of that drill program, you've decided to not apply for the forestry permit yet.
Yeah, so there's 2 things. It's not just the drill program. There's also the engineering studies that I referred to earlier on. So there's 2 pieces to the permit. So once we get a conditional approval for the project with the forestry permit, then we're unable at that point to do any more drilling, and we're unable at that point to change the footprint of the project in any way. So as I said, we're in the final stages of deciding which way we go with the heap, continuing the heap leach or going a concentrate route, or a combination of the 2. It may be that we start off with a heap leach and we progress over time, go to a concentrate. But the work that we're doing will modify the project footprint to some degree. So we don't want to have that locked in and not be able to change that. We had to make a conscious decision, Matt, that if we got it now, then it was going to be more difficult to change later on than holding off now and getting it set for the project we want to take forward. So that was a decision that we after, and these things, they're not black and white. So, we did have discussions with the department in Indonesia, both the mines department and the forestry department, to come to that decision, So the implementing regulations are not as, you've got the regulatory environment, but you've also got implementing regulations, and they're not entirely aligned in their application. So we had those discussions, and the outcome from that was decision made to postpone that getting that final permit until we lock these things down.
Okay, and we've seen a few instances in Indonesia and elsewhere in the world, actually, and CEOs are more prepared to talk about this off camera than on, but where the locals are starting to work out how to play the mining game too, to extract maximum value from mining companies. So when you talk about your ESG credentials or your CSR of old, your local relations and so forth, I mean, how do you go about ensuring this thing can get into production? You're not going to be delayed, and therefore, the cost of this thing doesn't go up.
Yeah, no, all fair points. So let's just sort of start with a couple of, I think, key fundamental things. Is that our project in Kalimantan, in a country that's populated by 250 million people, surprisingly doesn't have any people on the site or near the site. I think the nearest village is 9 kilometres away. So, we don't have direct impacts on people in terms of, where they're living. We don't have to move people, etc. The second piece is that there's been a community development trust fund set up here that's been operating for circa almost 30 years. And that has built up an enormous amount of goodwill through programs of education, through programs of capacity building, and health and certain sort of health programs as well. So, and health and education. So that trust fund, YTS, has and I've said this, in many forums, this project is in the best shape of any project that I've been ever involved with on day one for a project development, because of the goodwill that's been built up through that trust fund, and also because we don't have any people directly living on the site. So, they're important considerations. You talked about rent seekers. So obviously, we have our taxes and royalties that need to be paid directly to the government. The key thing, with any mining project is to ensure that the taxes and royalties that you pay flow back. Some of those flow back to impacts in the immediate area that you're working. So, the way that we would do that, and the way we've done that in many projects that I've worked on in the past, is to set up, as I said, we've already got the trust fund established. It's done a lot of good work, and it's done a lot of good work in conjunction with provincial government as well as local stakeholders and the company. So it's a three-way thing that we would set up and essentially, roll out a community development program around that. Employment's a pretty critical one. That's, we'll have a preferential employment program and all the important aspects around. I think that one of the things that when you've been involved in a lot of mining projects and building a lot of mining projects in developing countries and jurisdictions, there's a formula that, there's a lot of cultural differences, but there's a formula that works. Takes, considerable amount of effort, but, it's a very important part of enabling the project. And, I talked about, the parties that we're talking to in terms of strategic investors, they having an alignment in all of those things is a critical part of the decision-making process for us on who we go with as well.
So thanks for that. So with regards to how you're playing this out, so with project number one, you potentially need to give away 50%. Let's say you're going to let us know over the next coming months, who the strategic partner is, what it's going to cost you, but you've indicated, and let's go with that, 50% are at project level, right? And obviously, Ashish has come in and picked up 15.36% today. How long will it take, assuming all things go well, you get the equity from a strategic partner, the debt in place to actually get this thing built up, and how much cash could it be generating by when for you to use on your second project? And in the meantime, how much money do you need to raise to kind of keep things going and develop the second project? I'm trying to work out how you play this thing, because it's a balancing act. You're spinning plates here, and over what time frame could I, as an investor, expect to see this company start moving?
Yeah. Okay. So look, the lead time to production is, let's call it circa 24 months. So, and I said that from the end of this year, I said basically 24 months. So we're looking at, late in, back half of 2023, we'll be basically getting this thing to start commissioning. So then in terms of, okay, then you ramp it up, it takes a period of time to ramp up to full capacity. Full capacity, I guess let's assume that the copper prices, let's assume the feasibility study that we've done, plus the copper price of, say, circa, at $3.25, which is what we did the feasibility at, $3.25, it generates at full production around $100 million US of free cash flow per annum. At current prices, it's probably more likely pushing up to around $140, $150 million of free cash flow. So very strong free cash flow generating capacity from, it's a good sized project, 25,000 tonnes of copper. So then you sort of, okay, well that's your sort of case that you've got.
And you've got 50% of that.
Correct, 50% of that. And there'll be all of that doesn't come out of a business, as you know. So, part of that will be going into expansions and mine life increases and so on and so forth. The way that we've always thought about the second project, Matt, is pretty clear, and I've been very clear on this, is that it's a big project. It needs a large amount of capital. So we always said that we would be looking for a partner to come in and basically take operating control of that and take that through pre-fees, fees, and into production. We would maintain as big an equity stake as we possibly can in that project from the cash flows that we're generating from the other project. And ultimately, if that whoever has that project wants it, the value equation makes sense, they might want to acquire the whole lot. But, at the end of the day, it's maintaining as big an equity stake as we possibly can. And then, that's sort of how we've been very clear on that strategy from day one.
Okay, so it's basically taking the available free cash flow, which isn't going back in the ground on project number one, contributing your share of whatever that looks like in project number two, with the hope that there's an exit, the strategic partner wants to take you out completely, or at some point get into some cash flow there. That's the way to play this, or that's the way you want to play this. So me as an investor, I'm thinking, because I'm trying to say, what type of investor do I need to be to invest in this thing? I've got to have patience, but the good news is there's a plan. It's good. And the assets are good, right? They're small, but one's small but solid and cash flowing, and the other one potentially quite large, but solid project. So I would say I'm going to sit back and just maybe let this thing ride. That's the kind of investor I need to be. I shouldn't be chasing you every quarter, going, "Where's the money? Where's the share price increase?" Right?
Yeah, no. Well, I mean, I think you've got to put things into perspective. I mean, mining projects. These days, it doesn't matter where they are, which jurisdiction, we're talking 7 to 10 years, right? Larger projects, 10 years, smaller projects, maybe 7 years. So, that's the other time frames. And, to build a real project, you can look across the universe of recent developments and developers, and you'll see those timeframes pretty much apply wherever you are. Some of the big projects are much longer gestation periods. So it does take patient capital, investor capital, but you also look at those companies and you look at the re-rate that they've got in terms of value off the back of doing those things, that they're very, very substantial sort of returns on from where we are today to, in fact, it's funny, I was just looking this morning at Ivanhoe Mines, right? And, everybody's familiar with Ivanhoe Mines and what they've done in the Congo. Robert Friedland, is one of the world's greatest, mining promoters and personalities. But, that only a short period of time ago, that had a 300 million Canadian market cap, and it's had a tenfold increase in that market cap by getting that project in Congo into production. Now, it's a big project, and, it's going to produce a lot of copper, but, it's had a re-rate, essentially over 18 months, it's had a tenfold increase by getting into production, obviously in a strong copper environment. So, we know the life cycle of a junior company. You get that run up in the initial discovery, you get the orphan period. I've consider ourselves to be in the orphan period now. Once we get the project financing in place, all the permits nailed down, and we're into the next phase, then that next strong leg of equity growth should play out.
Okay, Tony, look, appreciate your time today. Come back on and let us know once you've kind of made some decisions about, well, one, can you find a strategic partner? Who is it? What's it going to cost you? And also, obviously, these drill results as they come through, I'd be intrigued to see what comes out of those. Appreciate your time.
Yeah, no worries, Matt. Yeah, we're in a very, really good shape, probably the best shape. Well, we are in the best shape that we've ever been. Looking forward to, a few good, really strong months coming up, and we'll circle back and give you an update.